Ladies and gentlemen, you're listening to a Sankarshan Joshi trip. Welcome back. On this trip, we are accompanied by my really good friend who is also a podcast host and he has a background in finance. He did his bachelor's in business administration and he's been investing in stock market since the age of 16. So initially when he started investing, he had only 5,000 rupees, but then later on, he started investing in six figures. So, listen till the end to know the journey of my dear friend Manish Hegdal.
A Sankarshan Joshi trip.
So, how are you
Yeah,
doing, Manish?
great man. Excited to be here. I know we've been meaning to do it since a long time.
Yes.
Yeah,
So,
finally we are
recently,
here.
recently I was on your podcast, which is Mathu Kathe. So we spoke about wealth and money. So I'll leave the description of Manish's podcast in the description. So once you're done listening to this podcast, you can go check him out.
Yeah, and my podcasts are much smaller by the way. Sankarshan really embraces the long form content. But yeah,
But I
I think
mean,
your episode is the longest that I've made on this one, like
yes,
the Mathu Kathe.
I get
Yeah.
that a lot, Manish. I know I'm talkative. Thank you.
Well, it's good though. I really like long form content, but the reason I don't do it more often is I I'm currently experimenting a lot with the retention. So I'm like I've made 10 minutes, even in like 1 hour. So I'm exploring all the ranges and finding my optimum. I think so.
Yes.
Yeah.
So it's always good to talk to someone who hosts a podcast too. Like you're the first person whom I knew that hosts a podcast, and recently a few of my other friends, Bisibele boys, shout out to them. So they have started doing this live, uh, sort of podcast form of content. So it's always good to see this form of content being promoted. So
Yeah, their
first,
podcast was really good. And yeah, doing it live takes balls, huh?
yeah. First of all, I wanna appreciate you for doing that and embracing that form of content because it's not very rewarding. You know what I mean?
Yeah.
Like,
Yeah.
because you put in like so much effort into doing this, so you don't. If you're doing a podcast, if you don't love doing it, then you're not gonna do it because the reward that you get is very less. So,
Yeah.
so yeah,
In
thank you.
terms of views or even feedback or anything,
Mm,
like yeah, there are some like there are many listeners that I'm grateful to have who give feedback to me on every episode. So it's good to have that as well. But like you said, the reward is like the
yes,
pain of sitting through a Zoom call, praying that the internet does not give up on you in the middle, and then
yes,
going through all that. Especially if it's a video podcast, editing is a pain in the ass. Like yeah, I think I can say that on your podcast. Yeah. So
yes. It is.
going
It
through
is.
all that, yeah, yeah, the pain, right?
Yes, I do. I do. I.
Especially if it's a multicam edit like yours and mine.
Thank you for saying that, Manish. If I would have said that, it'll be like I am digging my own hole on my podcast. So yeah, but I mean, like, I don't really care about like what response I get because on this, by the end of this trip, there is so much I am going to learn. There's so much whoever listening to this is going to learn. So it's very fulfilling in that aspect. So yeah. So, recently on your podcast, we spoke about wealth and money. So, I think when
Hmm.
people see the title of this podcast and my introduction to that I made while introducing you, it's gonna make sense now when I'm gonna give context to why we're doing this. Firstly, because I believe that I also mentioned this on your podcast that financial education is one of the most important education that everyone needs to get, not want, everyone needs to get. So and most of my listeners are from the age group of 18 to 22. I think that this is a very important age to get your financial foundation set, because from here whatever you're gonna do is gonna impact next 10 years of your financial situation, so how you're gonna be. So yeah, like I'd like to say that before we get into uh, talking to your experience of how you
Yeah.
started investing in the stock market,
And
because
also, like, I want to put this disclaimer out there that I'm not like a professional investment guru or something. I'm just sharing my insights and what worked for me uh, during all these years. And yeah,
yes, good
so
that even I was gonna mention the same thing, because I am stupid and I'm learning too. And I guess like we all are stupid at some level. We all are learning. So we all need to get our foundation right with respect to what is an asset, what is a liability. So asset is something that grows in value over a period of time. Liability is something that decreases in value over a period of time. So they are.
no, liability is you owing a certain money to someone. Like, that's what liability is. Asset, like, it can be a depreciating asset like a car or a phone or anything. So you can classify assets in that way, like appreciating assets or depreciating assets. So
But I think
liability
when you put
is
in context,
loan,
right?
basically.
But
Yeah,
when you put in context, right? Asset, when you say car, are you using car to create a value? Is that you using the car? Is it bringing you money or not? Like that adds in value, right? Let's say if I am a Uber
yeah,
driver, and if so, my car is my asset here.
yeah. It's basically an input. So
Yes.
yeah, you can look at it that way as well. But just pointing out some basic business terminologies before we get
Yes.
going. Yeah,
So, the reason why I mentioned this earlier is because when you start seeing things from this perspective, like what is an asset and what is a liability to me, I think a lot of things change, right?
yeah,
So, so for me, my temptation of spending money is tattoos, right? Like that is one thing that always it's like it pulls me, like I want to get like more and more tattoos, and tattoos are kind of expensive. So like I'm always tempted to invest in that liability. Like I'm not gaining anything from a tattoo, it's just for my thing. But I've made this rule for myself that every time I want to invest in some liability which is sort of expensive like a tattoo, I should invest exponentially more in an asset. So that is a rule that I set to myself. So just differentiating what an asset is and what a liability is has defined how I spend my money. So yeah, like that's why I
yeah.
wanted to define that.
Even I too have my this thing. Like, yes, I do put myself in a very strict saving. How do I put it? Plans. But then again, I too have certain hobbies that require money a lot. But yeah, I do end up spending a lot that way. But I think you should do that often, right? Yes, having tattoos for you might not, generate monetary value, but at least mentally or as a quality of life, it does increase your, at least, inc- how do I put it?
It
Like,
should
yeah,
it should add in value to your life in some way.
yeah.
Hmm.
So you can't look at everything in terms of that and then blame yourself
Hmm.
saying, "Oh, I'm this guy. I spend so much on this and this." But yeah, it's okay. And especially in our age group, I think investing more in yourself is better than investing in stocks. At least when you're
Hmm.
23. By the time you're 25, you know what your skills are. You are in a good job. Then probably, then like investing in a mutual fund or or in stocks is much better. Is what I feel.
Yes, that's absolutely true. I think that the way you put it out was so beautiful, because investing yourself, right? Like when you're spending money, I don't want to be that dude who's very stingy with money. I don't want to like, even though I want to do something, I don't want to like hold back. So it makes sense. So in whatever you are putting your money in, it should add value to your life, either emotionally or physically, or like some form of education or an actual money making asset. So either which ways it should add value to you. So
Yeah.
Yes, and the way how you said like you should invest in yourself, that might be like either learning a skill or gaining financial knowledge, like putting in money to buy books to learn certain things. So investing yourself uh, makes sense. So when you put it that way.
Yeah, like when this was like immediately after my 10th, right? I took commerce. So when you take commerce, obviously a lot of shit comes your way about you taking commerce. So I was pretty pissed off by that. And I was like, I have to, like, I had this thought process in my mind. Okay. I said, okay, why do you do science? Like, why do people prefer science? Because they think it's at the end you get a well paying job, right? So in the end, you are trying to make more money. But what if I start making the money right now? So people don't give shit to me for taking commerce and think that I'm a less of a student for taking commerce. So that was my initial motive to go into stock markets. Like I bought a book, studied that, then
What was that book?
it was a how I think it was called Beginner's Guide to Stock Market. It was a
Okay.
very poor published book. It basically just laid out. Uh, at that time, I really did not know what is investing, what is trading, or how do you, like, even if you save your money. Yeah, I knew there are fixed deposits and stuff, but I did not know various other things, like, let's say, bonds, or there were, I think, you could and you can still invest in post office schemes as well. Like there were so many schemes that you could do. And yeah, that book really opened me up to that. But it did, like, it just gave me a basic gist. I think even reading it on Wikipedia would be enough. But yeah, that book, then okay, I thought I should dive in a bit more. Then I bought some more books.
Hmm.
Then I learned there's something called as technical analysis, fundamental analysis. So I did a lot of reading in that. Then yeah, started investing.
So when you buy a book, like there are so many videos on YouTube, there's so many free ebooks on the internet. But when you make an investment, when you go buy something, that creates a motivation for you to keep doing that, right? Let's say you bought a book that you could have you could have seen a YouTube video, or you could have downloaded a free ebook, but you put in money to buy a physical book. That's a form of investment, right? Like it gives you
Yeah,
motivation to finish that book.
yeah, and at that time we did not even have 4G, I guess. Yeah, we did not even have 4G. So this
How old was
concept of
this? Because we
daily
are talking like we are
this was in back in 2016, I guess. 15, 16, somewhere around that. I don't remember correctly, but it was right about when I completed my 10th.
Hmm.
So it was basically 3G, and you had to spend a fortune to look at endless YouTube videos.
Yes,
And I did not have an internet connection at home back then. Like proper Wi-Fi was not there. So I thought buying a book would be
much
much
more
more
reasonable.
productive. Yeah, more productive. And also, when you buy a book, you physically commit to it, right? It's there on the table, and when we see it and you don't read, you kind of feel guilty that, okay, I spent this money to buy this book and I did not even
Yes.
give it time. So yeah, maybe. And actually, I never really read a lot uh, when I started, reading these kind of books. But after like completing 5, 6 books, I enjoyed reading. So then I started buying books other than finance related. So
So you
yeah,
created a
that.
habit for yourself of reading,
Yeah,
like you reading that book
yeah.
generated that behavior.
It's actually amazing how many life lessons I took away from just investing alone. Whether it's about sustainability or creating value, or there are so many other things like discipline and everything.
Yes, yes. Those are the
But
aspects
yeah,
that helped you.
Yeah,
invest better. So like how we talked about book, right? Like investing in book. So me doing this podcast also, like I am investing a certain amount of money into doing this and putting it on different audio streaming platforms. Necessarily this is not making any money for me right now, but this is a form of investment that is helping me gain a lot of knowledge by talking to people like you. So, just to give a context, when we said not all assets has to make money for you. So, like this podcast is my asset, and there is so many things that I take away from this. Not necessarily money right now. So yeah, it makes sense. So me investing in this, I took an annual plan. Like I don't pay every month. So like I took an annual plan. Like now I have a chip on my shoulder, in a good chip on my shoulder, that I want to keep doing this because it's a commitment, right, that I gave to
yeah,
myself by
yeah.
to
Podcast is also my very invaluable asset because I've met so many wonderful people, and I have them. Uh, I'm consistently in touch with them. For example, take SS Nakul. He is now private secretary to Nirmala Sitaraman. Right, having someone like that on your, just a message away, and yeah, he stays in touch, and he's a really cool guy. So yeah, meeting people like those, actually, yeah,
it
it is
adds.
some kind of an asset. So yeah,
It's definitely an asset. Like you said, all the guests who have been on my podcast have been really good friends of mine. So when this end, like there is so much, there is a relationship that you build with them, right? So
yeah,
that you can carry forward into the future.
yes.
So Manish Hegdal. So from Inception, how did you start investing?
Yeah, like I said, initially I started because of the shit that I was getting because I took commerce. But in hindsight, I would say it was the wrong kind of motivation. But anyway, it turned around for me, so I've got no regrets there. But yeah, then I started reading these books. Then I started observing. Okay, uh, I did not have a demat account back then. I did not even have a PAN card. You need to have a PAN card to actually open a demat account. So I was thinking of opening one, but I did not have a PAN card. So I was like, let me just observe the markets at first. So I spent a couple of months just doing my research and making these dummy trades. Like, okay, I buy this at this much price. Let's see where this goes and see what potential I have. And I made some good returns in that uh, couple of months span. So then I was like, I'm finally ready to get my skin in the game. So then I went to my dad and said, I want to invest. And he I think he had that idea because I was buying all these books and he was obviously paying for those books, so he knows that in someday he will come up to me and ask money to invest in stock market. But yeah, he was cool about it. Like, yeah, he did give me a disclaimer that back then you had this thing, right? The Because they saw the Arshad Mehta scam and everything while they were young, so
There's a
their
stigma
trust in the
associated to stock
yeah,
market.
yeah, so their trust in stock markets is not so great. So when I came in and I said I want to do this, then yeah, obviously he said some of his experiences, and he also pointed out that just because I failed does not mean that you will fail. But yeah, he just said that world is not fair all the time, so be careful and you can go ahead. Then I remember I went to the Carvey office near Durgama Circle. You know that office, like
Yes, it's in
you
our
went, yeah,
hometown.
yeah, in Ballari. By the way, for those who are those who don't know, so I went there and mm, I sat down and I asked, I want to open a demat account, and the lady was like, "Are you even old enough?" And I was like, "No, but I'll open it in my father's name." Then she gave all the documents and the marked where I had to get my father's signature. Then I went back, took my father's signature, opened a demat account. Uh, Back then, opening a demat account took forever. I think my process was around what, uh, 10 days or something, which is like huge. If
Yeah.
like compare it to now, you can like in, I think in 1 or 2 working days you are up and about. Like you can start investing. For me, like it took 10 days. Then I opened an account. But yeah, when you are trading with real money, right? Because I was doing these dummy trades back then. Mentally, I was okay. Like I've got nothing to lose. Why should I panic? So that was my mentality. But once I started investing with real money, it was difficult. I used to make 11 or 12 trades in a day, which is huge. There are quarters now, like in, I think, even in 1 quarter I don't make 12 trades, max to max, I think 6 or 8 in the span of 3 months now. But then in a day I used to make 12 trades because I invested. If it's like even 1 rupee drop or like 0.2% drop, I used to sell it off because, oh, I don't want to take a risk. But yeah, it went on like this for a day. But fortunately, our college timings helped me a lot because you and I went to the same college. You know the timings, right? It started at 8:15 and ended at 5:45. So when I went into the college, the market was still not open. When I came out of the college, the market was closed, and I can't trade on Saturdays and Sundays because anyway the market is closed then. So what I did was I used to put in an AMO. It's called aftermarket order. You can place it before the market opens, and when the market opens, it puts the order out there for you. So when I was going into the college, I used to put an AMO, put my phone in my scooter's dicky or whatever you call it, and I used to go. Then there was a break at, I think, 10:45 or 11, right? The first break. I
I
think it was
think so.
around,
Yeah, it was around 10,
yeah,
10:15, I
10:45.
guess. Yeah.
Yeah, somewhere around that time. So I used to go to the parking lot, see if the order is executed, and then if like make necessary changes if any, and then go back to class. Then there was a lunch break at 12:30, 12:45, I guess. So 12:45, I used to come in by and see if I could sell off, or if I was getting, if the price levels were where I wanted them to be. Then I used to put in sell or buy orders in the lunch break. And by the time I came out, I used to check, see if it has worked or not. Initially, it was even difficult for me because I put in an order, I sit in class, I could not concentrate in the class. All that I had in my mind was, what if it does not work? I can't really, stop the losses there because I can't do anything, right? I can't do any. Yes, there is something called stop loss. If the price of the share comes down to a point that you prescribed, it will automatically sell you a stock. Okay, so I did put in that, but still, I was new to this game and I was always scared. But I think 1 2 weeks down the line, when I made certain profits, I was okay. Nothing will go wrong so soon. I can lay back and kind of embrace this. And yeah, I did that for a couple of years, and that really built my discipline. So even now, if I've invested some crazy amount, I still don't look at that quote or that stock all day because I know it's not going to fall down in a single day. So yeah, that really helped me to and getting that discipline is key if you want to be a trader. If you want to be an investor, just put in the money and forget about it because you don't
So
really
what's
have
the
to,
difference
because you're
between
in that for a
trader?
long.
So what's the difference
Trader
between
is
trader and
some,
investor?
yeah, a trader is someone who goes short term, maybe 3 weeks, 2 weeks, or even intraday. Intraday means you square up in a day. So you
Yes.
buy it today, you sell it today. So there are a lot of there's something called intraday. There's something called a swing trade. Swing trades take about 15 days or something on the max. But yeah, trading is something short term. If you're investing, it's for the long term, more than a year. So if you're investing, I don't see why you need that discipline. But if you are someone who's looking to trade, you need a lot of discipline. And fortunately, because of my college timings, I developed that discipline.
Yeah. Like even though you were paranoid about it, you still had to wait because of the college timing.
Yeah, the first 2 weeks were hell though, because I could not even, concentrate in the class. All the time I was like, what if that goes wrong? I only have 5,000 in my account. What should I do? And 5,000, I'll tell you a funny story. Like whenever you start reading investing books, this quote will come saying, "Don't invest all your eggs in one basket." So people used to tell that to me, and I said, I only have one egg. How can I put it in two baskets? Because 5,000 is a really small amount of money. If you are trading, investing, it's good. But if you're trading, it's very small. So for
Hmm.
me, I could only do one trade a day. That was the only amount I had. But yeah, so I was paranoid that way. But as the time passed, you remember Praveen sir, right? Computer class. So
Yes.
his period was, I think, second period or something in my first year. So yeah, so I used to take his phone and check prices there. I was that paranoid.
Hmm.
But then I started to lay back, and once I started making profits, obviously it boosts your confidence. But yeah, that's how I learned trading discipline.
So far, what's the amount of money that you invested? Like, what's the capital? Like, since when you started to now, like, what's the amount that you have invested into the stock market?
Well, I wouldn't tell you the in specific amount that I invested publicly. I don't feel comfortable doing so, but I mean, vaguely, if I tell you, I think it's if you had told that I would have invested that much amount of money when I was in first PU, I would have said get out of here. But yeah, I wouldn't really tell you the exact number, but
I think that like
I,
when we spoke last time, the reason why I'm asking you how much money you have invested in the stock market is because I don't want to know. I don't really care about like what return you made off it. I just want to know how much money you invested because I just want to tell whoever's listening that like when you started, you said you borrowed 5,000 rupees from your dad, right? Like I just wanna give them an idea that you can start from there and you can come to this point. I just want to give them that idea.
yeah.
So
So yeah, like yes, I the first money that I invested was obviously 5,000 rupees that my dad gave me. But then again, I had some people who knew that I was doing in stock markets, and they lent me the money for. Mm, there were some like my father's partners and people who knew, who believed in me. They did give that money, like extra money to invest. Like we did like a kind of partnership, and yeah, that also gave me a lot of insights, because the risk that I was taking with my own money, my risk tolerance, reduced a lot when I was investing with other people. That also
so it's
gave
like
in.
out of so if you borrow money from one of your dad's friends, so you
Hmm.
give them a percentage of what you make from the investment. Did that how it go?
Yeah, basically the profit you get, you kind of split it, but I have never really paid them, because till this day I have never really liquidated that
Okay.
fund. So it's still there. So yeah,
So you
I
just gave
started
them
doing
back how
that.
much
So
money they gave you.
no, when I liquidate, let's say in a later date, I've never really done it. But if at a later date I decide to get out of this and I start, selling everything and liquidate the entire funds, I'll just look at the profit, the principal amount plus whatever the profit, their percentage of profit, I'll put it in and I'll give it back to them. That's how that works. Uh, but
So
yeah,
there's a
that's
lot of
how.
trust factor that is involved in this, right? Like they would have, so you might have been like really close to them for like if they have to give you
Yeah,
money.
yeah.
It's not like you borrowed a loan or something. Like it's more on a personal relationship basis, right?
It's like they are investing in you in kind of in in a way. So that actually really helped me, because to boost my confidence as well, uh, because someone is and also it gives you that kind of responsibility, because when you're 16, 17, you are trading, you are greedy. uh,
You want to make money, you want to make quick buck.
yeah, yeah, yeah. And that's what I was doing, and I did take a few losses when I became really greedy. But once I started getting this kind of money, I was much more responsible. Yeah, I matured as a trader when I got
Hmm.
outside funds. That's how that works. And I any money that I used to get from my relatives or my as a gift, I used to I even now invested back in the markets or into my fund, to be specific. uh, and a couple of side gigs that I do. I like, yeah, I did a lot of trading in commodities, so I made some money there. So a part of that money I invested in this thing. So yeah, the if you look like how much years has it been since 2000, say 16? It's what,
It's
four,
been
five
five
years now.
years.
Yeah, 5 years. I think
What a
I'm still
great
in that
math
six
skill
figure.
for a trader to have.
That's I really suck at math. If you look at my the if you are our podcast, like your episode on my podcast, I really did tell you, right? I sucked at maths. That is the main reason I took commerce. The thing with stock market is you have all the softwares to do the math for you, so you don't really have to be
Yeah.
good with numbers. But yeah, in 6 years, I think I am still in the six figure this thing, like the amount of
Hmm.
investments that I've made. And yeah, the
So
return
yeah,
in terms of percentage.
starting from 5,000 to investing up to six figures, like there is a very small baby steps of increments that
Yeah,
you came, right? Like not everyone is everybody wants six figures, but they don't want to take those baby steps to reach the six figures. So
yeah.
like that's the reason why I asked you to elaborate on your story just to create a possibility
I
for.
think I think it's just if you uh, it's kind of like an addiction, because once you start
Hmm.
investing and you see the value growing and you see its potential in, let's say, 10 or 15 years down the line, you can't help it. Any money you get, you start pouring it in once you get the taste of it, at least. So after that, I don't think you need any kind of motivation to do that kind of saving or do anything. But yeah, to get to that point, it takes a lot of will and patience, which a lot of
Absolutely.
teenagers don't have, that
Absolutely.
even I did not have.
So I think when I started investing in the stock market, I was 21, 20 to 21 years old. So it was initially
You
when
are
the
how
lock
old
the
now, by the way?
I'm 21 now. Yeah. Like I think I was 20, 19 to 20. Yeah, yeah. I think 19 to 20. I'm so sorry. Yeah, my math
The
skill
first phase
isn't
of
great too.
lockdown you started investing.
Yes, yes. So
Okay.
when the lockdown started, right, there was so much time that I had, and coincidentally, even my college ended. Uh, so like that academic year ended, so I had a lot of time in my hand. Plus, like I've always been very fascinated with creating value, being an investor, like stock market, like what's happening, money, like being successful, making more money. So like growing up, I'd always had that aspect in me. So when the lockdown started, I had this cousin of mine who's really good in finance. Like he has a lot of knowledge, so he invested. uh, his portfolio is amazing, like the stocks that he's invested in. So he created a he cleared a lot of competitive exams too. So initially I sat with him and I asked him to give me an introduction to stock market. So I thought there is no better person that could help me get into investing into stock market. So when he started explaining, right, he had a very negative image on intraday trading or short term selling. So he always saw value in the long term investment, like holding a stock for a lot of years. He was on that end of the spectrum. So whatever I think that I took a lot of good points from that end of the spectrum. So he taught me how to analyze a company. Like when I see a stock market, let's say Coca-Cola, or that could be like Burger King, or anything, right? So he would take me through a company's website, and he would give me a pointers saying, see, these are the like products that they have. uh, do you think that this product a lot of people would prefer in the future, or how do you think this company is gonna work in the next couple of days? So there is a lot of attribute that comes into analyzing a certain company, right? Let's say when we take McDonald's, or let's say Burger King, or any fast food chain. So there's this one key point where uh, India, there is a rapid urbanization that is happening, right? Like a lot of villages are turning into urban places. So that would give a scope for fast food centers like McDonald's and Burger King. So just to throw in an example like this, so there was a lot of valid points that he taught me uh, on analyzing a certain company. And then when I invested, I was never interested in making a quick buck. So he explained me how compound interest works, like how a certain stock values increases, like how its value increases over a period of time, and you just have to wait, have the patience to hold it for a decade, or like 5 to 6 years, or any long term time for that matter. So I think that yeah, like you, from when I talk to you from where you come from, you started off from making a trade in a single day to like couple of days, right? So when I started, I was never interested in making a or like intraday or trading, or like selling a stock in couple of days, because I know I was bad at it. I know there were so many things that I don't know about stock market, that I cannot predict if it is gonna, if a certain stock is gonna increase its value in just like a week time. Like I wasn't well equipped to make that sort of prediction. So then I started investing in like well established good companies with well foundation. So
Good
yeah, like
foundations. Yeah.
yeah, so I just hold on to those stocks right now. That's all.
Yeah. The lot of what you said, when I was reading a book in my initial days, I came across this concept of value creation. Okay. So, whatever the, if you want to succeed in stock markets, you have to understand it in the first place. And how you understand it differs from people to people, because what I identify markets with is the concept of value creation, right? So if I'm investing in a stock, let's say Tata Steel, which long term I am very bullish on that stock, and my average buying price in that stock is around 200 rupees. Right now the stock is, I think, almost 1,000, or I don't know. I don't even see where it's at, because I know 10 years down the line it will be like two, three, four times even better than, like, more than what I had invested in. Yeah. So how the value creation works is, ask yourself if what the company is doing is creating value in the market or in the society. If it is creating a positive value in the society, obviously it's going to succeed. And at first, I think, if you are to apply this concept into markets, it is very complex. But the reason I caught on to it very quickly is because I was always around this value creation concept, but I never really recognized it. For example, my father is a businessman, right? So when I was, I think, in second standard, we were in water can business in Bandari. So back then, what used to happen is, you've seen those white water cans,
Yeah,
like
the
the
plastic
25 liters
containers,
ones.
yes.
Yeah, full white, like the thick white ones. You should never drink from that kind of can, because it is used for a chemical this thing. It is used to store liquid chemicals and stuff like that,
Oh
which is
wow.
not really meant to,
Store
be
water.
drinking, store water or drink water out of it. So what my father did was he saw that something like this is happening, so he came with that the transparent can ones, right, which was never which was non-existent in that kind of market. And when he came into the market, obviously, I don't think the price was that much, but still, I don't know, for some reason people prefer white cans over transparent cans. I don't know why, but he had to do a lot of educating to people that this is really bad to drink water out of. This is what you should be really doing. And initially, it did not really catch on, but once people saw value in it, we really hit it off. So
Hmm.
that, I think, my father telling me that when I was young, I think that concept of value creation was there. Even my chikappa, or how do you tell, paternal uncle, how do you call it in English? So he is in retail, and he is big on consumer experience. So if anyone walks into his shop, how you greet them, how you know like show them around, or how good the experience is when you walk into the store, he's really big on that, and you see that working for him. So I've always been around this concept of value creation, but when I read it, I recognized it. Okay, this is a thing. Then I took that and applied it to the stock market. So if I'm investing long term, my long term portfolio looks really good because I applied that concept of value creation on every single stock that I invested in. Trading, even in trading, to some extent, you can do it if the like if you're trading on an event based news. Let's say a company is announcing something, a new product or something, and you're investing, like trading on it and betting that if that product is good, obviously the stock price will go up. So if you're trading on an event based, I think you can, up to an extent, you can apply this concept of value creation. But if it's like, if you're purely trading on technical points, then this concept of value creation does not really work, because you all you're doing is trading on, like, say, moving average or Fibonacci sequence or something like that. So it's a very technical term, but for those who know, they understand. But yeah, uh, that concept of value creation is important in whether you are starting a business, you are investing, or in any of your social interactions. If I'm talking to you, it's adding value to me, so that's why I'm talking to you in the first place. If you're So yeah, that's how that value creation works. And also the power of compounding that you are telling, right? Compound interest and stuff. Compounding is uh, the power of compounding is unfathomable. I think it was Albert Einstein who said
Yes, yes, it was him.
compounding is like an eighth wonder of the world or something. No? Yeah, it is really cool. Just a great example is coronavirus, right? From November 2019, one case, up until here, I think it's somewhere around 17 crore cases, around 38 lakh deaths. So see, it's that's the power of compounding. So
So, when you, if you could explain what compounding is in brief to someone who hasn't heard that term, like how would you explain that?
compounding, at least you, how do I explain it?
I'll
Compounding
just
in terms
Google
of
it.
investing. No, I think in terms of investing, what happens is, let's say I've invested 100 rupees and I got back a return of 140 rupees. Instead of taking out that 140 rupees, I invest. Uh, no, I'll give you a better example. Wait, in terms of percentages, let's say 100 rupees I've invested, I got 10% return, which is 110 rupees. Instead of taking out the 10 rupees, I invest 110 rupees again and do 10%. That's 11 rupees, right? If I'm not wrong, I'm really bad at math.
So here it says compound interest is the addition of interest
Interest is
to
different.
the
Interest is
to the
different.
principal sum of loan or deposit
Yeah,
uh, or in other words, interest on interest. So
interest you interest. I think compound interest everyone knows, right? A
yes,
simple
yes.
interest and
No,
compound interest. You've studied it
I
in
was just trying
maths.
to create a bridge between what perception they have about compound interest. Use that into uh,
No, compounding is that's what I said, right? Instead of taking out your returns, you reinvest it, and then the same 10% will give you much more, right? So
here. I've talked to a lot of people with respect to compound interest. Like each person has their own unique definition of what it might mean. So whoever's listening to this, in order to better understand what compound interest is, you can either go to Google or YouTube, learn more about that. This is uh, one of the thing that I
I'm
would recommend you guys
I
to
really suck at like I understand compounding very well, but it sucks I can't put it in
it
words.
it's very hard to articulate what compound interest is. Plus I could have got someone else who has a lot of knowledge into finance field to talk about it. I was very much interested to talk to you because we are of the same age group and we are in our early 20s. It's just
Yeah,
a bunch of early adults bullshitting about money. Like, you know what I mean? Like, this
yeah,
could, like,
yeah,
whoever's listening, they fall in the same category, age category as we do. So it's something that they could relate to in that aspect. Like if you could do it, that would motivate me and it would tell me that, oh, like even I could do that. Like even there is a possibility for me to learn a lot in this field to make more money, because everybody want to make money, right? Like who doesn't? Like
yeah.
every fucking body wants to make money, but there are only few people who will logically sit with themselves and ask, how do I make money?
Yeah. That is true. And if you look at like people, especially these days, everyone on social media or on YouTube, every other YouTuber is an investing guru right now. If you look at it, everyone is saying, "Oh, you have to invest in crypto, you have to invest in NFTs." Oh, Bitcoin was this much in 2008, and now it's crazy, like somewhere around. I think I don't even know. It's crazy amount of dollars in terms of Bitcoin at least. But if you even look at when I started, right? When I started, Sensex was around what 26,000, and I, on a like the highest I saw back in I think 2016, 17, 18, it was 32,000 or something. Now it's around 53, 52,000. So it's huge in terms of in just a matter of 5 years, it's grown a lot. And on the top of my head, I can give you at least 10 to 20 companies. If I invested even 5,000 rupees, now it is something around 50,000, 60,000, or 1 lakh even. But there are all, but what you have to understand is there are always going to be these kind of assets or stocks that can make you money. But predicting that from today's point of view, say, I can't say for sure that you invest in Bitcoin today, 10 years down the line, it's going to be like $500 million or something. I can't really do that. If I were to do that, I would be speculating, right? So always invest in stocks or assets that you can understand, not
uh,
because the person next to you is doing it. Because I never really invest in cryptos. I did I invested Bitcoin back when it was around 4 lakh rupees or something. I think I put in some 15,000 or something like that. But then I sold it when the Bitcoin price at 13 lakh. I doubled my money. I got back 30,000 or something. But after that, I never really invested in Bitcoin or any other cryptocurrencies just because I don't understand them. There is nothing fundamental about it. They're not a company. They're not producing something. Or even if it's funny what Bitcoin wants to replace currencies, right? Like the Indian currency or the dollars or whatever. But Bitcoin is really being treated as gold right now. It is just like from you, it's an asset to hold, right? But at least if you invest it in gold, you can at least show it to people. Bitcoin just, yeah, the appreciation is huge compared to gold, but then again, you would be banking on the idea that one day someone will be willing to take that Bitcoin off of my hands. So I don't really know if there is a market. Let's say Bitcoin hits 500 million, like $1 million, let's say. People should be, then new people should come in and buy that Bitcoin at that price. Then only you'll be able to realize that profit, right?
I just wanted to mention the point that you said about seeing value in a certain thing.
Hmm.
Like when you're investing your money into something, seeing the value in it. And the second point was you have to understand the asset really well. Like
Yeah.
if you want to invest in stock market, you need to understand the company. Like you need to know how it works. And now I think there are very few people who actually understand bitcoin in the world. A lot of people are just investing in the bitcoin because of the hype that it has created of making money. Like everybody sees the
Yeah.
like in hindsight they see how much money bitcoin has made in a couple of in the past. So they want the same return. They are using that in the future. Like they want to make the same return that it gave in the past.
But it's interesting, right? Bitcoin was created as a form of, saying FU to the regulators and centralized markets. For example, stock markets, right? So they wanted a decentralized place where nothing is regulated and fair value is, the markets are free in its truest forms. But what Bitcoin or cryptocurrency for that matter right now is, it gets fluctuated if Tesla accepts Bitcoins, and
It's very
if
volatile.
Elon tweets or something. So it's not really a great asset if a person tweeting or not tweeting is affecting your price. I don't think it's a strong asset in that form. And also, I, I like whenever I say countries can outright ban it, right?
Yes.
But China did it. But again, when I talk to some of my friends who are Bitcoin believers, they say China tried to ban it like 100 times, but still did not succeed. Yes, you will still find a way to, let's say tomorrow India bans Bitcoins. What you will do, you'll find a back route where you can channel your money and then buy Bitcoins just to get a piece of that action, not because you believe in Bitcoin and you want to exchange Bitcoins on a daily basis. Because that what, if you want to replace fiat currencies, you have to do the functions that, let's say, Indian rupees does. I can go to a supermarket and buy a Lay's packet for 10 rupees, but I can't go to the supermarket and buy a Lay's for, say, zero point zero 0.00 whatever Bitcoins, right? So that until that kind of transactions happen, uh, I don't think Bitcoin will ever, achieve its what it was meant to do. And also, the governments will outright ban it, dude. And obviously the blockchain is here to stay because the technology is super, the transaction cost is so minimal, it is going to stay. But Bitcoin, I think someday it will get banned. And also in India, it's crazy. You have to give your PAN card, Aadhaar card, then you can invest in Bitcoin, right? Bitcoin was supposed to be anonymous. No one, no one was supposed to know who is sending Bitcoins. But if you are giving your Aadhaar, PAN card, everything, you, in an essence, you are going against what Bitcoin was created for, right?
Yes,
So I don't see
absolutely.
how that works. But yeah, a lot of people will come back at me because just you go on Twitter and just tweet something like Bitcoin is shit, all these people with laser eyes will come and spam you so hard.
I mean,
But
this
yeah,
is your perspective, right? Like whatever we are talking, this is our
yeah,
own perspectives.
that is just my perspective. Yeah, not even Sankarshan's, it's just my perspective. But even NFTs, man, I don't see. For those who don't know what NFTs is, it's called non-fungible tokens. It's essentially artworks that are only in virtual form. Okay, so I've seen NFTs like a red pixel, just a red pixel, dude, just a red pixel being sold for hundreds of thousands of dollars is not even a joke. Like, at least, okay, I buy a painting, at least I can show it off to whoever comes to my house. But I can't be like, okay, I buy a painting in an NFT. Let's say you come to my home, Sankarshan, you should see this art. I what, wait, I'll get my laptop. And I get my laptop and I open and show it. It does not really make sense to me. But I don't know. But if a lot of people are doing it, it might be doing something right, which I don't see.
I
But
mean,
to me,
not
at least,
necessarily
to
true.
to to how I understand money and how I perceive it, to me at least, the idea seems so bizarre.
Yeah. Even it
But
seems
I might
bizarre
be
to
wrong.
me
I
too.
might be wrong. Yeah, I might be wrong. 10 years down the line, someone will come to this podcast and say in comments, oh, you're wrong about Bitcoin. I can't really, there's no way of me telling it, right? Who knows?
This is
All the
just
governments
your
might say, ah,
prediction.
Bitcoin is.
Yeah, yeah, it could be like there is a chance of either way this thing could pan out, and it comes down to your perspective on how you see the value in it. And seeing value also comes into picture in this perspective, because right now when you look around, there is so many stocks that increased so much in value during the pandemic. It doesn't make sense, because like when you see from the value creation perspective, a lot of people have lost jobs. A lot of people are
Yeah,
not willing to put in money to buy luxurious things. Not a lot of people are actually buying things during this pandemic, but there are so many shares that have increased in value. So many countries, like their uh, like the average of the stock market, the money has increased in so much, and people just want to have that piggyback ride. Like people are coming and investing just to get a piece of action, like you said, from the money that people are making. And it doesn't make sense at all. Like when you see from value creation perspective, like logically when you see what value has this company created that helped in the increase in its share price. So when you see from that perspective, you can actually see.
yeah, that is true. Right now, the markets are really overpriced, if you ask me, because I think someone was telling to me yesterday there are around 20 to 30,000 empty shops in Bangalore who have gone out of business, and it's available for rent now, which is crazy. 20,000 shops, like where is the business happening, right? The stock market, in the end of the day, it also depends on this sector that is not public, right? It also gets its money from there. So if people are not spending enough money, obviously it will translate into their business someday. But I think the reason we are seeing this kind of growth is because a lot of people who have time in their hands to now learn what stock markets are, to now, okay, open a demat account and invest. I think a lot of people are coming in and just investing, and that's why that is just my theory, that it's going up. But I think we are due for a very bad correction. I think it's going to uh, whoever is coming and investing right now at least 50,000 or 52,000 levels, I think they're going to see a lot of loss. But I don't know. I've been saying this for a year now. I've been saying this for a year now. So I haven't really made one trade since the first lockdown, because at first I thought obviously lockdown is happening for 2 months, businesses will suffer, I don't think how stock market will go up, but then it went up. But the one thing is, yeah, last year the automobile sales were really good. A lot of people bought cars because maybe the public transport was not there. That was like, okay, it created some kind of value. So say a share like Tata Motors appreciating in value is good. But then again, I see retail sector shares going up, which I don't. They are closed for 2 months in a year. How can you like create value out of that? So I don't know how that happens. And also, I've given some bad advices a couple of like last year. So one of my friend had made loss. I thought at that time market was slightly correcting itself. I thought it might even go down. So I told him to cover his losses and sell it off. But fortunately he did not do it and earned good enough profit on that trade. So I even stopped giving advices to people nowadays, because I don't really understand what's going on, because that's just me, because that's how the way I see the stock market is not working right now. So for someone else who's coming into it, how they perceive it, for them it might be working. That's just how markets work. Your strategy will not work 100% of the time.
Yes. And because like initially you didn't invest in like you didn't make any trades when the lockdown started, because you weren't in a place to understand how this thing is gonna
Yeah,
pan out. Like there's so much of uncertainty.
yeah, like the best point about technical analysis is, if you read a technical book, it says technical analysis is based on how market reacts to different situations. Like if I come to slap you, you will raise your hand or you at least duck or you do something. That's how you react. So the next time I come to slap you, I know what kind of reaction you have. So the basic idea is that you'll see, like, let's say it's a recession, you see how the market reacts to a recession. You say it's a period of economic growth, you see how the markets react to that. Or in an event of war, how markets react to that, you see. Because ultimately market is, oh, if you divide it, it's just people, how they react to different kind of news. So if you learn how people are going to react to it, you know how the market's going to act. But in lockdown, there was no data for me to go back and see, okay, this kind of lockdown happened before, this is how the market reacted, because we were doing it. So I thought, let me not burn too much money here and see what happens. So I took a step back and I just observed. And even after a year, I'm still observing. I don't know what the hell is going on.
So yeah, so get slapped the first time so that the next time you're getting slapped, you can either duck or move back. So
Yeah,
quote
yeah.
by
But if
Manish
you are,
Hegdal.
yeah. But there is no way for you to not make losses. You will make losses, but the only funda here is that keep your losses small. That's all.
Get slapped the first time so that you can duck the second time. Motto for life.
Yeah, yeah. You have to make mistakes to learn, not to make them. Huh?
Yes. So
Yeah,
seeing from the value creation perspective, everything makes sense, right? Like this is not just, so this is how I see things. Like, so when I so now I am very much interested in the fitness space. Like I like trying out new things in fitness, so I love exercising. So whatever things that I learn from it, like I implement it in my life. Like there's so many perspectives that I gained from it that applies to every aspect of my life. So even when it comes to investing, the way how you said creating value, right? Like when you see things from this perspective, regardless of anything, let's say friendship, is this friendship creating value to you or not? Let's say you watch a movie or you spend time, you do anything, you can just question this one thing: is this creating value to me or not? So if you're spending like crores and crores of money into something, and if it's not giving you happiness, that means that that is not creating value to you. So
yeah.
it's like regardless of any emotional state that you are in, this one question, the answer to this can can direct how the next course of actions in your life is gonna be.
Yeah, that is true. And also, like you said, you are on my podcast and we're talking about capitalism, right? Capitalism is something that we discovered or invented. Is just human intrinsic nature. We are having this conversation because you feel that there is some kind of value coming out of we both having this conversation. So this concept of debit and credit has always been there. So you just have to embrace it. That's all.
Oh yeah, we had this amazing bit on your podcast about transactions. We spoke about how everything is a transaction. Either it
Yeah,
is debit or credit. Like either you get something from someone or you give something that is of yours to someone.
both take away value, then it's a good transaction.
Hmm. Both the parties should be satisfied. Like what you
Yeah,
give, the other person should want it, and
yeah.
so it's a fair trade.
Yeah, only then. If we were having this conversation and only I thought being on your podcast gave value to me, but then I did not add anything value to your podcast, then it becomes a bad transaction, and our relationship will not work anymore. So yeah, it's the same with business. Make all your transactions good, then you will survive as a business. It's this basic idea.
Yeah, and like there are so many people who don't see relationships, who don't see friendships as a transaction, and that is good because like they come from a very spiritual perspective. But when you ask this question of are you giving something to the relationship, yes, even though you don't get anything back, you're still giving. That means that it is a transaction without expecting anything in return. So it's
It's a
like,
charity.
yeah, basically. Basically,
Yeah.
yeah, like basically, yeah. So everything is a transaction. So I just want to re-establish if someone has this point that no, I'm not this
Yeah,
main
it's a
person.
charity, right? It's something that you care for and you want to do something about it and you don't expect anything in return. It's basically that. You can divide everything on the basis of that. But yeah, but the one thing that I have, if I were to give you that one thing that I took away from investing and everything is I did not care if I was saving 50 rupees a month. Even that meant something to me. And what it translated into is if it was a new hobby that I'm learning, or if it's a new thing that I have to invest time in, I look at things in a perspective where okay, 10 minutes every day is 70 minutes a week. So I look at the long term picture, and I
Huh.
keep my expectations very reasonable. If I say something like say I want to learn drawing, like, or sketching, which I really suck at, I can't go there and say I'll give 2 hours every day, which is, even though you have that time, mentally you won't be present for 2 hours a day doing something solely. So if I say okay, I can concentrate good for, like, say 30 minutes, and then I add that 30 minutes for, let's say, a month, 2 months, 3 months, 6 months. If I look at it that way, I think it makes a lot of difference. And that's how I because even if academically speaking, I do much better now than compared to when my SSLC or anything, because at that point I did not understand this compounding or whatever you want to call it. But now, though I understand it, I look at it different, in a different way, and I obviously invest, okay, 10 minutes, 20 minutes, 30 minutes, whatever that time is, and invest it over a period of time, then exponentially it will grow. So that's
Absolutely,
that's
man.
uh,
Absolutely. That's so amazing the way how you put it out. Like, I really appreciate the way you put it out because I have very less education in the financial space. Like I come from a very commonsensical perspective. Like I don't come from I've seen markets, I've seen shops, I've seen a lot of transaction happening around me in every single place. So I come from that background. And like how fitness has helped me like gain perspective on a lot of things is uh, so when it comes to fitness, right, in order to, let's say, if your goal is to do a 100 kg deadlift or a 100 kg squat, like if that's your goal, even though you lift every single day, you might not reach the goal in the amount of time that you expected, because there are so many things that is involved for you to do a 100 kg squat. Like you need to have a proper hip mobility, like you need to have a proper foot mobility, like you need to have like a upright posture. So if I spend my time working on my foot mobility, if I spend time working on my hip mobility, that will help me squat better, which will help me reach my goal in a very more like I don't have to spend a lot of time uh, like achieving that goal, had if I didn't work on these. So technically you aren't really squatting, but you're working on other aspects that will help you squat. So now when this thing was embedded in my head, I started seeing everything differently. Now, if I have to be a better designer, like I recently finished my bachelor's in design, so I come from design background. So if I have to be a better designer, I don't have to keep designing more. I need to work on different aspects of things that will help me be a better designer.
yeah, true. And I read this quote by Jordan Belfort, the guy on whom the Wolf of Wall Street movie was made. I follow him on Twitter. In one of his quotes, he said, "When you struggle, simplify." It was just a single line, and it just made so much sense to me. It's mind blowing, and that is the reason I tell, at least in our age group, invest in yourself does not mean that it has to be money. You have to buy that course so that you get that skill. Even if you invest, time is an investment. So if you invest. That's the beauty of hobbies or anything, right? Whether for me it was stock market, for you it is fitness. So I take away some learnings from it and I implement it in my life, and I become a better person. Yours was fitness, like you said, about squatting and everything. You at least translated that learning into your life, and now you're a better human being, right? So always invest in your lives, no matter what hobbies you have, it will definitely translate into a life skill. So that is why I'm big on investing in yourself. It does not have to be money all the time. Even time is a great investment. So give time, learn a hobby, because the way our education works, we don't really get that skill.
Yeah. Now let's say in 24 hours, if you had 24 crores rupees, how would you invest?
Hmm.
Like if you start thinking from that perspective, I had this
Hmm.
phase during lockdown where I think I read this quote somewhere online or I heard somewhere. It's like if you had 24 crores, or if you had like this many like minutes translated into money, like would you invest in what you're investing right now? Let's say, would I sit and scroll through Instagram? So then you sit and critically think if anything that you do is a worthwhile investment.
But again, I think it gets toxic pretty fast, because then you start that hustling culture comes in. No, you have to work all the time, you have to be productive all the time, which I don't think anyone can keep up
Oh
with.
yeah.
But yeah, though the question, if you had 24 crores, how would you invest it, is pretty good brain work if you were to think about it, though.
Yeah,
Yeah,
yeah.
it's
So
fun. Like maybe I would have invested, say, maybe 10 crores or 12 crores into long-term investments, which will just make me money until I die. Then the rest, I think I would invest it in some kind of business. Obviously, a small business, because I don't have the expertise to run a big business and grow from there. Yeah, probably. That's interesting question, though.
So see, when you see sleep, a lot of people might be like, "Oh, I'm spending like if like 24 hours into 24 crores. Oh, I'm spending like 8 crores just on sleep. Like I'm not doing anything." But if you see from value creation perspective, this 8 crores investment in a sleep adds a lot of value to your life. If you get a shitty sleep, you do a lot of things shitty. So you lose money somewhere
Yeah.
else. So it's like, so even like it's not just one question. Like you need to ask multiple questions. Let's say 24 crores, are you investing in something that is creating value to you? Like that could be anything, right?
Yeah.
Like you said, like this could help someone escape the toxicity of this habit.
Yeah, that is true. But yeah, like uh, it's mainly because of social media. Because someone at your age is doing much better than you.
Yeah.
You also have to berate yourself to get to that level. But yeah, I think I've made my peace with that a long time ago. So I don't really have that
Good for you,
toxic
man. Good for you.
mentality. Yeah.
Good for you. Like even now, recently I put a post on my Instagram story saying, I put my before and after photo. So initially I had a lot of body fat on me, but then I got into fitness and I started overtraining myself, where I lost a lot of fat with the muscle. And then I stopped overtraining and I started like moderately training and I started like eating a lot more. So then my body actually progressed better. So not necessarily more doesn't mean it's always better. So
Yeah.
like in order to escape this toxic or toxicity of like working all the time, like putting too much efforts, like hustle hustle hustle, like yeah, like too much doesn't always mean it's better.
Yeah. How can you hustle from your home right now? It's because if you like someone, say, doing theater, for example, for him hustling virtually does not work. He can't do theater shows in a Zoom call, no. So it's okay to adapt, and it's okay. Like your career can't be going on a same trajectory all the time. There are ups and downs. The sooner you accept it, I think the more peaceful your life will be.
Yeah.
And yeah, and I think, like, I had a question:
Okay.
is losing weight easy or gaining muscle? Like, I had this doubt really.
Oh man, like even so initially it's like when you're trying to lose weight, you think that losing weight is hard, but when you're trying to put on muscle, you feel like gaining muscle is hard. Uh, like in my
But if you
journey,
had to choose one,
like in my journey, like so initially I was 86 kgs, 86 kilos. From then I went to 64, 63, and then like right now I'm in my 70s, 70 kgs. So like I've averaged out. So I think that for me, gaining muscle from 60 to 70 was harder than
yeah,
losing weight from 80 to
yeah,
uh,
because you can't put on weight, right? You have to put on muscle
you
mass
can
more
you
in
can put
sports.
on weight. So here's the tricky thing in fitness. Like if you want to lose body fat, like if you want to lose weight, if you do a lots and lots and lots of cardio, if let's say you lose 20 kgs, in that 10 kgs is muscle and 10 kgs is fat. So when you
Hmm.
gain back 20 kilos, you just gain back the fat, you don't gain the muscle. So yeah, like that's the point that everybody needs to like have in mind when they're starting their like fitness journey. So so yeah, like that's why you need to like lift weights. Like lifting weights is a very sustainable way of losing fat, because you're gaining muscle, right? Like whatever food
Yeah.
that you put, it will go in building muscle. So hence, like in long term, you lose fat. Like just like coming back to our value creation, like when you see workouts, like when you see workout, there is like beating yourself up and then like doing like cardio, sweat, and then there is other way where you work out like 1 hour a day, skillfully lift weights, not actually beating yourself up, but the latter will give you much more sustainable and better results.
Yeah,
So
that is crazy, man.
yeah, I think that's a really good note that we could end this podcast on. uh,
Yeah,
Thank you so much for being here, Manish.
yeah, the pleasure's all mine, man. I had a great time.
So I will leave Manish's podcast in the description below. You can go check Mathu Kathe out. I really love his podcast. And this podcast is recorded on video as well as audio. You can catch the
Oh,
video
you're on
version.
audio platforms now. Yeah.
Yes.
A Sankarshan Joshi trip.